Well, welcome to the Don and Gino Show and the National Real Estate Cafe. We love being with you, and we miss being able to do that. Sit in the studio and have fun. Remember that, Gino?
Yeah, well, Don, we had a lot of great times in the studio, but as I look at that picture, I was definitely looking much more handsome with a good haircut and a beard trim, and probably about at least 10 pounds less too.
Yeah, like you said, that your clothes are shrinking.
Yeah, definitely the clothing shrinking. That's what's happening.
You know when that happens. I'm using a lot of hot water lately.
That's what it is.
So we're going to dive in. We've had this is our part of our three-part series from CoreLogic of what's happening with the real estate market. We've been giving you reports. The first two reports were a little misleading, but we want to let you know where they started from and the fact that the Corona crisis hasn't affected the reports for appreciation levels on reports through February or delinquencies or foreclosures. So now we found a really good report that's a little bit more forward thinking in that they look at pending contracts, pending sales, and compare list prices with actual sell prices, see if there's an adjustment and see if people are still hitting the mark on the amount that they want for their home. And we were a little surprised at this, or not surprised. So
Well, I mean, the reality is, I think that this report's going to show some of that initial impact into the market,
agreed.
and I think that the initial market, the deals that were in escrow, had to discount themselves immediately just to continue to close that escrow. There was that initial shock factor where buyers were holding sellers hostage, saying, "I'm going to cancel if you don't price."
Right.
And so there was a lot of that happening, and I think that you're seeing that in these numbers.
Yeah, but what we're seeing now, I mean, and maybe you're surprised. You're like, it's only down 0.3% in April. Well, that's not a huge amount. And like Gino said, there was a little shock factor, and a lot of buyers agents are trying to leverage the fact that there's a little shock factor, but that's already worn off. Everybody's gotten used to the new normal. Um, Real estate agents, lenders like us at Finance America have figured out how to make this work smoothly and professionally. And now we're seeing actually multiple offers again, and we still don't have enough inventory, right, Gino?
We don't have enough inventory. In fact, one of the things that's happened is this has further fueled our inventory crisis. Sellers have pulled properties off the market because they didn't want to blow them out, because they didn't want to just sell them in a time of fear, just like stocks, right? You don't want to sell them in a time of fear when there's potentially devaluation that's not real. What do they say about fear? It's false evidence appearing real. And we had plenty of that in the markets, whether it be in the stock market or the housing market. And as you saw in the markets, you've already retraced half of what we lost, even though there's more long-term effects into the stock market than there are into the housing market.
Yeah, and we feel that once everybody continues to get used to the new norm and the restrictions are lifted a little bit, that we're still going to see home values hold, because bottom line is we'll do that video tomorrow on inventories, because that's going to be the key factor. That's what Gino and I keep relying on, the fact that we just don't have enough inventory. The millennials are coming, and probably more than ever, they want their own home.
And I was just going to say, there's a little bit of a change in mindset too, right? I don't want to live in a high-rise condo with a bunch of people and share an elevator and all of that. I mean, from a lifestyle perspective, I want to live in a single-family residence, or I want to live in a condominium that has direct access. I don't want to have shared spaces as much as possible. So if you're looking to invest in real estate, I would look at areas that have less shared spaces and less density.
Especially if you have a family, you want to protect your family. So more than ever, if you have a family, you're going to want to protect them and put them in a safer environment if possible. And right now it's perfect. Rates are at all-time lows. It's a great time to buy. It's a great time to sell if you want to move up. It's a great time to sell because there's not enough inventory. The market is awesome for the real estate market. We're in one of the great
It's a
industries.
little tiny edge to the seller right now.
A little bit.
I would call it a seller's market today, this week.
Because
That
there's
could change in the next few weeks.
right. Once we have less than 6 months worth of inventory, then it's a seller's market basically. But it's still a great time. Hey, for you buyers, who's had better rates than now? All-time lows? It's ridiculous. It's a
Unbelievable.
great time in the real estate market. And what's nice is the real estate industry, instead of causing the catastrophe, is going to be the one pulling us out of the catastrophe this time. So talk to your real estate professional, your mortgage professional, and let's get you in a home. And again, you can find out more by going to donandgino.com. You can always email us.
Subscribe to our YouTube channel.
What's that?
I said we'd love you to subscribe to our YouTube channel. That's the best way to get a hold of us.
There you go. Thanks for tuning in today. And tomorrow we're going to talk about inventory levels.